Good day from Ed Talk Today. I'm Ed, by the way. Today I'll be taking the mystery out of selecting the right business entity for you and your business. Why do we even need to do this? It's a good question. So I'm going to try to give you my answer. No matter how small your business is, you're going to want to separate your business assets from your personal assets. Why? When you carefully put your business assets into a separate entity, you protect your personal assets from a liability point of view. Heaven forbid someone wants to sue your business. Don't let your personal assets be at risk. Remember that once you formally separate your business activities this way, you in essence create two different people. Your business assets are subject to legal judgments against your company, but your personal assets are protected and generally not subject to lawsuits arising out of your business. And yet, it's just a precaution, but it's a very important one. So please don't make this mistake by ignoring it. Now, I'm not a lawyer. I'm just giving you my thoughts from many years as an entrepreneur. Read my disclaimer below and consult a professional legal and or tax professional if needed. But depending on the scope and size of your business, or whether you'll have a partner or partners, you can do most of this work yourself. It's pretty simple. Let's get into the details. The go-to for many new businesses is forming an LLC, a limited liability company. By far, the majority of small businesses, probably most businesses in the USA, begin as LLCs. They're flexible and inexpensive to create. I formalized my most recent business with my state online in an hour or so for maybe $250. Never talked to a human being. Money well spent. And as the business grows, I can easily convert this into an S-Corp or partnership. And there may be some solid reasons to do this. But I don't have to do that now. For now, that single member LLC is perfect for my business. So if you're starting small and you want the simplest way to protect yourself legally, for my money, a single member LLC is a great first step. And by the way, get yourself an EIN, that's an employer identification number, whether you have employees or not. It's free, takes 5 minutes on the IRS website, and you'll need it to open that essential business bank account. The EIN takes the place of a Social Security number. So for your business, you have an EIN. Personally, you have a Social Security number. But what happens down the road if your business grows when you go from that simple LLC setup to something more complex or more strategic? Well, let's take a look at what happens next and how to know if it's time for a change. As your revenue starts to increase, a few things shift. Suddenly, you're making more money than you need to live on. You may be hiring help, adding a partner or partners, building something that's more than what may have been just a side hustle. And here's the kicker. With those changes come new tax implications and in some cases liability concerns. At this stage, you've got a few choices. You can remain a single member LLC. You can bring on a partner and operate as a multi-partner LLC, which is treated as a partnership for tax purposes, or you can convert to an S-Corp. I don't want to make this complicated, but these are the simplest and most common paths. Let's break that down. Option 1, converting a single member LLC to a multi-member partnership. Now this move is usually triggered when you bring in another person as an equal partner, an investor, or someone you want to reward with ownership down the road. That happened to me when I started a company called Sunbelt Search Partners as a single member LLC. I later wanted to reward a key person with some ownership and a share of the profits. Great way to motivate employees. At this point, we refined the operating agreement and we became a partnership. So what happens when you do that? The moment you have 2 or more members, the IRS automatically treats your LLC as a partnership, unless you elect otherwise. That means your business will start filing a separate tax return. I believe it's a 1065. But you'll also be issuing something annually called a K-1 to each partner, showing their share of the profits and losses. The key difference here is the flexibility. Partnerships allow you to split profits any way you want. 50-50, 80-20, 90-10. You're not bound to distribute money based strictly on ownership percentages. You can also account for contributions of time, labor, or infusions of cash, and so on. There's a lot of flexibility with a partnership. But that flexibility comes with added responsibility. And while your single member LLC may already have an operating agreement, you will now need an operating agreement that is far more defined and complex. Trust me. You want one that spells out who owns what, how decisions are made, and by whom. What happens if someone leaves or, God forbid, dies? That operating agreement becomes your company's rulebook. Without it, you're flying blind and risking confusion, disputes, or even lawsuits. So think about that. And no matter what your friendship and prior association is with your partner or partners, they can sour in a hurry when the unforeseen occurs. Trust me on that. Bottom line, convert to a multi-member LLC if you're adding partners or investors. But take the time to put your agreements in writing, not just a handshake. Now let's talk about option 2, electing an S-Corp status. This one catches a lot of people's attention, and for good reason. It's generally been my favorite in small business operations. Now, this is where it gets interesting. At some point you'll realize, hey, I'm paying self-employment tax on every dollar of my net income. For sole proprietors and basic LLCs, that means a full 15.3% of self-employment tax comes right off the top. And this is 2025, that's what it is in 2025. And I also looked for 2026, it's going to remain the same. Sometimes that has changed over the years. This is not including your regular income taxes, your federal and state. This is 15.3 comes right off the top. And that's where an S-Corp comes in. An S-Corp structure allows you to split your business income between a W-2 salary that you pay yourself, subject to payroll taxes, and distributions, which are not subject to self-employment tax, that 15.3%. So let's say your business is netting $120,000 a year. For this example, assume you're billing $150,000 and you got $30,000 expenses. As a standard LLC, all of this $120,000 net income gets hit with the full 15.3% self-employment tax before you even pay your regular income taxes to federal and state. As an S-Corp, you can pay yourself what the IRS considers a reasonable salary, and let's, for example, use $60,000, half of that $120,000. You can pay yourself a reasonable salary, $60,000, and take the rest as a distribution, cutting that self-employment tax burden in half. Now, this isn't some magic loophole that old Ed cooked up. The IRS requires that your salary be reasonable for the work you do. You can't pay yourself $500 and take the rest as a tax-free distribution. That's just asking for trouble. We don't want trouble with the IRS. But when structured properly, this election can save you thousands legally. So who should elect S-Corp status? When I say solo entrepreneurs or business owners, let's just say netting $60,000 plus or minus or more consistently. And those who actively work in the business, not just passive investors, because you're paying payroll. And owners who don't mind running a payroll, filing a few extra forms, staying organized, because the tax savings can be real. If that's you, then converting your LLC to be taxed as an S-Corp could be the smartest step. How and when do you make this S-Corp election? Well, let's talk about the mechanics for a minute. You don't have to give up your LLC status to become an S-Corp. Just file a form with the IRS electing to have your LLC taxed as an S-Corporation. I think the form is a 2553. Been a long time. I might be wrong. Check that out. Your state entity will remain an LLC, but for federal tax purposes, you'll get the benefits of the S-Corp treatment. The election to become an S-Corp has a deadline. It's 2.5 months after the beginning of your tax year. So if you're 12/31 tax year, March 15th. So if you want to be taxed as an S-Corp for this year, you better get that paperwork done early. There are exceptions to this deadline, but that's beyond the scope of this video. Just do it on time. So once that election is accepted, you need to immediately start paying yourself a salary, a W-2 salary. What do we say, $60,000. So start paying yourself $5,000 a month. Withhold taxes and file quarterly tax forms. I think they're called 941s. And at the end of the year, file an S-Corp tax return using, I believe it's Form 1120S, but check that out. And update your operating agreement to reflect this new tax treatment. It sounds like a lot, but if your profits are growing, the tax savings easily outweigh the extra administrative burden. And here's a short word about C-Corps and when they might make sense. Because some of you might be wondering, why not just form a corporation? The answer is sometimes you should. But for most small business owners, it's not the right first move, in my opinion. C-Corps are great for business planning and to mainly raise outside capital. Startups who want to offer stock options, maybe, although you can still issue stock options as a C-Corp. But C-Corps, as we call regular corporations, they're not pass-through entities like the partnerships, LLC, partnerships and the S-Corps, meaning they pay taxes at the corporate level and, again, at the shareholder level when dividends are paid. That's the infamous double taxation that people talk about. It's not necessarily bad. It just depends on your goal. If you plan to reinvest profits or aim for some big equity event down the road, selling stock, going public, an S-Corp, a C-Corp makes sense. But if you're building a hands-on, cash-flowing business that pays you every year, you will usually get more flexibility with an LLC or an S-Corp. So where does this leave you? If you're starting small, working solo, testing a new idea, the LLC is your best friend. It's cheap, it's flexible, and it's scalable. If you bring on a partner, consider a multi-member LLC status with a partnership structure. Just make sure you have a strong operating agreement. You might want to consider competent legal and tax advice and brainstorm the what-ifs with experienced pros. If your profits are rising and taxes are eating into your growth, maybe it's time to look at an S-Corp election. Run the numbers, talk to a pro if needed, and make sure you do it right away. And if your vision includes investors, scale, or a major exit from the business, selling out, then maybe, just maybe, a C-Corp, a regular corporation, deserves a seat at the table. The key is to pick out what fits your business today, but always with an eye toward where you're headed. You can always make changes. It's knowing why and when a change is in order. So here on Ed Talk today, I'm encouraging people to start their own businesses. If you've seen my other videos, you'll understand why. Thus, this YouTube series. Here's some of the other topics in this series that are in the queue right now. Please like and subscribe with all notifications so when a new video drops, you'll be the first to know. And thanks for watching, and I'll see you next time on Ed Talk Today.